If you're looking for research that is betting against the crowd, you have come to the right place. I am at Map Signals. I'm looking at our latest insights piece, and it's looking at why we've been net bullish on the stock market in 2023. Before we get into that, consider this. JP Morgan released a poll asking clients, where do you see the S&P 500 at year end? Get this, only 5% saw the index at 4250. 95% of the results pointed to a level of 4,000 or lower. So basically, the crowd is bearish. There was another survey out of Bank of America. It showed how fund managers are the most bearish all year. So this got me thinking, if the crowd is on one side of the boat, General George S. Patton said it beautifully. If everyone is thinking alike, someone isn't thinking. And that's the power of research like Map Signals. So let's go ahead and check out why we have been net bullish on the market this year. We're looking at the Big Money Index. As a reminder, this is looking at unusual trading activity. So if buyers are stepping into our data, that means the BMI is in an uptrend. You'll notice that the stock market tends to follow. You see that here, you see that here. And so this year, that line has been trending higher, and that is because select small cap companies, we've been talking about this in our research a lot, they have been under heavy accumulation. So whenever you net out the buys and the sells, there's more buying under the surface. That line is telling us that money is going into the market. So it's been net bullish from a tactical positioning. Why else have we been bullish this year? Well, we did a really great study. There's a video that you can see of a post-midterm election year playbook. It's a lot of words, but basically when you look at returns since 1980 of midterm election years, of the 6-month period, November through April, the S&P 500 over those past 10 instances have always been positive. You can see that here. The S&P is up on average 13% during that period. Maybe even more impressive is the following year. Annual returns for the S&P tend to be right around 16%. So the backdrop since November, when the world was saying that everything was going to crash and everybody was so worried, the backdrop was bullish based on history and based on data. So why is this important to what Map Signals does? Well, remember I told you there were a handful of stocks that are leading the market higher, causing the BMI to rally. Well, you can see we've got this amazing tool. I get excited, right? Because I helped create this process where we look at all the buys and sells every single week. We rank those stocks based on technicals and fundamentals. We get this really beautiful map score. The highest stocks, right? They're going to have the highest score, just like a GPA. The lowest stocks, they're going to have the lowest scores, right? You could imagine a D or an F score. All right, you don't want that in your portfolio. Well, here is an example from March. It's looking at the top 20 stocks. I've got it blurred out for obvious reasons. This is for paying subscribers. But check this out. Of those top 20 names, look at the forward returns since they've made this list. Double digits, right? And that's the power of looking at single stocks, right? The market is up, call it 9% year to date. However, many single stocks, they are up a lot more than that. I think also more impressive too is look at the names that are under distribution, i.e. they're getting sold. They continue to head lower, and that's why you've got to be following the big money, and you can bet against the crowd whenever there is heavy accumulation under high quality stocks. If you enjoy this type of research, check out mapsignals.com. It's awesome. If you're a financial advisor, check out mapsignals.com. And remember, do your own research. We're just trying to make you guys better investors with data. I will see you next time.